Bitcoin just tagged $105,000. A milestone that once seemed out of reach is now just the beginning. Sentiment across markets is exploding, with bullish energy as Bitcoin powers through all-time highs. And the stage is set for a move significantly higher. This isn't just a price rally, it's a fundamental shift in market psychology. With US and China cooling their trade war, slashing tariffs dramatically, a massive wave of optimism is sweeping global markets. When economic titans ease tensions, capital floods into risk assets. And Bitcoin, well, it's leading the charge. This rare alignment of easing geopolitical tensions alongside Bitcoin's breakout is sparking a broader surge in risk assets. The Nasdaq instantly pumped 3% as commodities caught bids, investors rotated capital out of bonds and into crypto. For you, that means one crucial thing. A clear runway is now present for risk assets, especially crypto, to surge way higher. And who's leading this new wave? Institutions. From skeptics to stackers, Wall Street giants like Goldman Sachs are quietly placing billion-dollar bids on Bitcoin's future. You'll be shocked to hear what you find out. From ridicule to rush, Goldman Sachs becomes Bitcoin's biggest ETF backer. And we're going to talk about the major Trump announcement as well. Let's talk about institutions first, though. Goldman Sachs has quietly become the largest institutional holder of BlackRock's iShare Bitcoin Trust, holding over 30.8 million shares worth $1.4 billion. Just a few years ago, Goldman was publicly skeptical about Bitcoin. Now they're stacking. And why does this matter? Because institutional inflows signal long-term conviction. These guys are not swing trading. They're parking capital for years. They see the big picture. And when the likes of Goldman and Brevin Howard, Jane Street, and D.E. Shaw all pile in, it creates both a validation moment and a supply crunch. Remember, these spot ETFs need to back every dollar with actual Bitcoin. That's draining the available supply. Combine that with the halving, and you're staring at a structurally bullish setup. Altseason begins where Bitcoin dominance ends, and ETH is first in line, my friends. Ethereum is up 60% in the past 30 days. And if you've been watching this channel, we've been telling you that we're still bullish on Ethereum and think it's significantly undervalued. And ladies and gentlemen, if you want to make sure that you stay ahead of the direction that things are going so you can take advantage of opportunities like this, make sure that you subscribe to the channel. And guys, if you find value in these videos and you find value in the fact that we've remained bullish even though when everyone else was bearish, do me a favor and absolutely destroy that like button and share this video with your friends so they don't get left in the dust, unless that's your intention, so you can rub it in their face. And we've talked about this before, right? But why is Ethereum breaking out so much? Well, it's the most battle-tested layer one outside of Bitcoin. ETH reclaimed $2,500 with strong momentum. And this time, it's not just whales. Layer two activity, staking growth, and the Petra upgrade are giving ETH fundamentals a massive tailwind. Bitcoin dominance has started dipping, falling from 65% to 63.9%, while the ETH BTC ratio is bouncing. That historically signals the start of altcoin season. Retail is rotating into ETH, then into high beta alts. When ETH gains strength, it amplifies the entire crypto risk curve. Cheaper fees, smoother UX, Ethereum just got an upgrade for the masses. Ethereum's Petra upgrade is a game changer. It doubles what's called blob capacity. You don't really need to know what that is, but the important thing is that it slashes fees by 30 to 40%. It allows gas fees to be paid in any token, not just ETH. It raises validator limit to 2048 ETH, making staking more efficient. And the user experience improves. That's what we all want. Gas drops, ETH becomes more scalable, not by much, but by some. Petra makes Ethereum layer 2 ready for mass adoption. Let's talk about wealthy on-chain, broken the bank, the crypto lifestyle paradox. And guys, I just want to show you this meme real quick because as I was just scrolling through X, this really got my attention. So I'm in the US right now shopping for a house, and of course I find the house that I want to move into, and they would like to see bank statements and they would like to see proof of income into banks. Not living in America for the past 8 years and coming back here and realizing that now I have to try to blend in with some of the more TradFi experiences. And it's really difficult for me to explain to them that I don't get paid in fiat, that I don't use bank accounts, that I use crypto accounts. And can we please just show you my proof of funds looking at my crypto accounts? And it's been a really difficult process across the board. Another funny thing, showing you how disconnected I have been from the TradFi system. In my early 20s, I started a startup. In fact, I was a young entrepreneur. I tried many startups that failed. During one of them, I got myself into $40,000 of debt. I had to file bankruptcy. And from that point on, 7 years later, it comes off your record. Okay, great. But I've never, ever checked my credit score since essentially before I left the United States, which was over 8 years ago. And I just assumed it was still horrible like it used to be. Well, when I applied for the house, I found out that it's actually much, much better just by simply making my card payments on time, because I still have 1 or 2 credit cards and very low balances on those. But when I do have to use them for things like subscriptions and whatnot, I pay them on time. Anyway, it just shows you how massively disconnected I am. And when you're living in the crypto lifestyle and you forget the banks, you get a smack of reality of just how far behind the rest of the world is. It's actually crazy. To transfer money to people and not use crypto rails, to use bank transfers, or someone told me at the car dealership to bring a check. I haven't seen a check since I was in the checkout line with my mother at the grocery store. Unbelievably antiquated systems that we hope to see upgraded over the next year or so with the legalization of stablecoins. And it would be a massive, massive quality of life improvement in the United States if we could all just pay for things in stablecoins and not have to use things like checks or credit cards or banks. Let's go. Anyway, now ladies and gentlemen, $6.4 trillion printed, and Bitcoin was the first to notice. Let's not forget how we got here. From 2020 to 2022, the Fed printed $6.4 trillion to backstop markets. That Fed led to 9.1% inflation, the highest in 40 years. Now in 2025, the inflation's cooled. They say it's 3 or 4%, but you and I know it's actually lower than that. But the liquidity is still sloshing around the system. US money supply is back to pumping. Arthur Hayes even said recently he only watches US M2 because that's the fuel for crypto. When M2 rises, Bitcoin absolutely rips. Money chasing fewer scarce assets means asset prices go up. Bitcoin is a chief among them. Tim Draper, message to CFOs. Bitcoin isn't optional anymore. Tim Draper, if you guys don't know who he is, Bitcoin billionaire before Bitcoin even, says if you're a CFO and you don't hold Bitcoin, you're being irresponsible. And he has receipts. During the SVB collapse, the banking collapse, some companies couldn't make payroll, but those who held Bitcoin, well, they were operational. Bitcoin doesn't care about banking hours. Now, Draper forecasts $250,000 Bitcoin in 2025.
Sure, yeah. I mean, if people want a prediction, sure, 250,000 by the end of this year. But
end of 2025.
Yeah.
Combine that with Saylor's prediction of 70 plus corporations adopting a Bitcoin strategy. And the picture, it's crystal clear. Bitcoin isn't speculative anymore, it's strategic. They said no, then bought billions. Vanguard joins the silent revolution. Vanguard, ladies and gentlemen. Publicly, Vanguard said Bitcoin had no place in their portfolios. There was no passive income. We covered this on the show. But privately, they've scooped up over $7 billion in spot Bitcoin ETFs. Let that sink in. The ultimate passive institution, backed by elite family money, is now passively long Bitcoin. Add this to their existing exposure via MicroStrategy, Tesla, and Block, and they're one of the largest indirect Bitcoin holders globally. Vanguard flipping means the old guard has now joined the revolution. Whether they admit it or not, the banks are coming, and they're bringing liquidity. There's been a massive structural shift. US banks, like it or not, can now legally offer Bitcoin services. That includes buying and selling and custodying crypto for clients. Average Americans can now access BTC through their trusted bank app. Banks will need to buy spot Bitcoin to fill orders, adding to the demand. If one bank offers Bitcoin, others will race to match. Whether you trust them or not, this is net bullish. Regulation just paved the way for mass access. You have to remember, what is the primary objective of a bank? Is to make money for them and their shareholders. If they can offer a new product, they're going to do it, and they're going to do it aggressively, and they're going to try to do it better than their competitors. The quiet sovereign bid has begun, and it's coming from the States. Fiat archive data shows 141 total Bitcoin-related bills across US states, with 47 strategic Bitcoin reserve bills and 36 active SBR bills across 18 states. If states allocate just 1% of Treasury reserves to BTC, that's $23 billion of inflow, enough to buy approximately 247,000 Bitcoin. Add Trump's proposed 1 million Bitcoin to the Federal Reserve Plan, and that's over $76 billion in sovereign demand. Wisconsin already bought $160 million in Bitcoin ETFs. Arizona and New Hampshire have passed crypto allocation laws. This is happening right now. Conviction pays. Saylor's Treasury play is now $20 billion in profit. MicroStrategy now holds a whopping 553,000 Bitcoin with a cost basis of $37.9 billion. At $105,000, that's over $20 billion in unrealized gains. Saylor's not done. He recently raised another $700 million to buy more. 70 plus public companies are now modeling the treasuries off MicroStrategy. Every BTC he buys is one less coin in the liquid supply. That's your supply shock in action. Demand is 4x the supply. And that math doesn't lie, ladies and gentlemen. We talk about the supply shock a lot on this show, and you're watching it happen right before your eyes. After this last halving, there's 450 Bitcoin per day that are mined. That's 450 new Bitcoin coming in every day. And the ETF flows, well, between 1,000 and 2,000 Bitcoin per day. That means the ETFs alone are absorbing 2 to 4 times the daily supply that's being emitted. At peak, it hit 12.5 times the supply. Long-term holders aren't selling. Exchanges are draining. Whale wallets are growing. This is textbook supply squeeze. The only valve left is price. Markets are ready, liquidity is flowing, and crypto's at the epicenter. Inflation is down, rate cuts are back on the table. Global conflict is de-escalating. The NASDAQ is roaring. Money supply is expanding. The environment is turning pro-risk. That's exactly when crypto thrives. Bitcoin, in my opinion, of being in the space for 13 years, has never looked this good from a macro, institutional, and regulatory perspective. This isn't the top. It's the beginning of a new financial era. Bitcoin at $105,000, ETFs absorbing supply, states and institutions stacking, ETH actually innovating, banks onboarding the masses. This is no longer an underground movement. This is the financial system evolving in real time. Ladies and gentlemen, you are not late. You're in the front row. And just when it seems like things couldn't get any better, well, Trump had his announcement this morning. The bottom line, the TLDR, is US and China just hit pause button on their trade war, slashing tariffs for 90 days from an eye-watering 145% down to 30% on Chinese goods, and from 125% to 10% on US goods. At the same time, Zelensky and Putin are set to meet in Istanbul to discuss and hopefully have an outcome on peace. This would cause geopolitical pressure and tensions. Also, Trump helped to negotiate a peace deal, or at least a ceasefire, between India and Pakistan, which could have potentially certainly turned into a nuclear war.
We helped a lot. And we helped also with trade. I said, come on, we're going to do a lot of trade with you guys. Let's stop it. If you stop it, we're doing trade. If you don't stop it, we're not going to do any trade. And all of a sudden they said, I think we're going to stop. We're going to do a lot of trade with Pakistan. We're going to do a lot of trade with India.
So at this point, ladies and gentlemen, all the uncertainties and headwinds that we saw just a few weeks ago seem to be coming to an end. And that is very bullish for our markets and our bags. Altseason is basically here, or at least just around the corner. Bitcoin is pumping, and we're gonna keep you up to date on everything that's happening in the crypto market so you can stay ahead of the curve. That's gonna wrap it up today, guys. Remember, stay sharp, stack your Bitcoin, and I'll catch you guys on the next one.